What did you think of what you saw and you heard from the call and also from the report? Did it change your price target or your rating on Tesla?
Yeah, no question. It was a disappointing earnings release. They missed by 10 cents, and this is the fourth straight quarter that they've missed. So, in the aftermath of the earnings release, we've actually downgraded the stock from a buy to a hold. Our 12-month price target is now $240. And the stock has really had a impressive rebound since their last earnings release in April. The stock was up almost 70%. And so, in light of that, and also what we think is a lack of near-term catalysts here with the robo-taxi day having been delayed a couple months until October, there's really not much in the way of near-term developments, we don't think, in the story. And so we felt it was appropriate to move to a hold, and we will revisit that rating in October.
We're going to get to the road ahead for Tesla in just a minute. Could I use that pun one more time? But Garrett, on a serious note, our data team working overtime. I want to show you a chart when it looks at the gross auto margin for Tesla. The slide that we've seen in gross auto margin, how concerning is that if you're a Tesla investor? I mean, really margin, that's really where they have the advantage over other automakers.
It is concerning, and it's a reflection of EV pricing that has come down so much over the past year and a half, and also the recent launch of the Cybertruck. Anytime you launch a new model, especially a kind of a niche product like the Cybertruck that's more difficult to mass produce than, say, the Model 3 or the Model Y, that's really going to weigh on margins overall. And so, they indicate on the call they haven't yet hit the point of profitability on the Cybertruck. They're continuing to ramp that up, and so that's really weighed on margins. But long term, we still like the story. We think there's significant margin expansion potential over time as they sell more full self-driving subscriptions and as they continue to improve their product there. And so, importantly, software sales are extremely high margin, unlike auto manufacturing, which is very low margin business. And so over time, that's going to be accretive to their margins.
So I want to go back to those Elon Musk comments we played at the very top. He basically said, if you're a short-term shareholder, Tesla's not the stock for you. It sounds like you actually agree. I mean, coming up, and you said there's no near-term catalyst, but what about long-term? Coming up, robotaxi event on October the 10th. Supposedly the less expensive Tesla, the $25,000 Tesla possibly in the first half of 2025. And then Optimus, a humanoid robot for external use in 2026. Do you think those are long-term catalysts for this stock? And does Elon Musk have a point? If you're a Tesla shareholder, you have to give it some more time.
We agree, actually. You really look at the near term and the intermediate term. I'm talking looking out 2 to 3 years. There's just not a lot of clarity right now as far as earnings growth, and you're actually seeing estimates come down, not increasing. And so, until we get more clarity on what the intermediate term looks like, we think it's a hold. We think you're going to get that, come October 10th. But right now, Tesla is a story stock. It really relies on a steady stream of positive catalysts, hope for the future. Elon Musk has talked at length about what they're doing in robotics, AI, the robo-taxi, energy storage. But a lot of these are really long-term drivers, and we believe in the story longer term, but there's just not a lot of visibility looking into the near term or the intermediate term.
So Garrett, we got to go, but very quickly, you said it ran up just too far, too fast. It's pulled back quite a bit right now, trading at about 228. Do you think this is a good level for Tesla, or is it still, after that run up, is it still elevated?
So where the stock is trading pre-market, there's some upside to our target of $240, but we think it's a hold here. It's kind of taking a wait and see approach. We think that's the right approach for investors.